So many traders are getting this wrong and refusing to trade with the trend. So in this video, I'm going to show you exactly how to trade with the trend on the 1 minute and 5 minute chart to scalp with indicators that every trading system has. I will go over a list of rules that you need to follow in every single trade. By far, one of the most important factors to you making money as a trader is having a strategy you can stay consistent to and that has an edge to make money over time. The biggest reason day traders fail, they have a strategy they do not stay consistent to. They switch strategies. They're placing random trades. The strategies they are using does not make money. I'm going to be showing you one of the easiest day trading scalping strategies that I have used for stocks or options that I found working with well over 1,000 traders over 20 years. No matter if you are the beginning or advanced trader, by the end of this video, you will have a better understanding of the strategy and hopefully it will get you one step closer to having created your trading goals. What we're going to go over is a trend following system. What we're trying to do is get up and in stocks on a consistent basis and have high degree of probability of entries. The very first thing that we have to focus on is what stocks are we going to even look at? In other words, when the day is about to start, what should we be focused on? And the bottom line with this particular strategy is the most active names of the day. That's going to usually lead us to names like Tesla, Apple, Nvidia. The bottom line is you really want to focus on those top 10 or 20 names or names that are starting to cycle through. Any trading platform should have this. Now, if for some reason your trading platform doesn't have anything like that, this one's free where you can get this information from. It's barchart.com. A lot of other sites have this stuff as well. I have no affiliation with barchart.com. They just have it set up pretty nicely. So I wanted to just kind of bring this to everybody's attention. So you can see right here where the US exchange volume leaders are. And what you want to focus on with something like this is not only the largest cap companies, but if something's in this top 10, and if they're in that top 10, and it's not a very large company such as AI or ABEV or GNS or NIO, and they're in this category, like they are here for March 3rd at the time of doing this, that's what you want to focus on. For example, AI is on the list. It's number 3. We know Ford is a behemoth. We know that Tesla is a behemoth. So we will come down the list and we see AI there. Now, I know I'm throwing a lot at you already, and there will be a link at the end of this on how to get actual transcript of this so that you can actually have a hard copy of it. Sometimes people digest information better in written form. So we can see clearly here that we had outsized volume. Obviously, this was on the earnings play, but this would allow us to pay attention to AI and understand that AI is going to be one of the top names that's going to get the most volume that day. Therefore, it will have some of the most action and most volatility, which is what we like as trend traders. So now we know how to pick our name. First criteria that we're going to use is a 200 moving average. It is a simple moving average. And why are we doing this? We're doing this to determine the trend. So we will overlay this on a 5-minute chart. And unless we are above this 200 moving average, simple moving average on a 5-minute chart, then we are not going to get involved. We must be above this. If we are down here and what the other criteria meet, it does not matter. We have to follow all the rules. Again, the goal is not to make the most. The goal here is to be consistent. Once we get consistent, we can dial it in. Now, to take another example, we're going to start. Step 1, 1 minute chart, 200 moving average. Simple moving average. Anytime you're below it, it's not even considered for a scalp trade. You're not even looking at it. It must be above. And you could just see something as simplistic as this, how it could have kept you out of harm's way and given you really good indications on what was going to happen next. We're going to look at a 5-minute chart. We're going to make sure that we are above the 200-day moving average on a 5-minute chart. That's an important distinction that you're going to notice because we did not clear that till around 2 o'clock. Whereas at 12 o'clock, we cleared it here. Whereas on the 1-minute chart, we cleared it earlier. Matter of fact, we cleared it a couple times and eventually it becomes what? Support. But this is 2 hours ago where it popped over on the 1 minute, but we were not confirmed on the 5. So we see the hold and retest on the 200 simple moving average on a 1 minute chart there. And that's denoted by the blue. We do not get our second level until we are here 2 hours later. Our second rule is a retest of a key level. For Nvidia, you can see how we gapped down, rallied. We needed the retest. Retest happens right around here at 11:30 on Friday. Here's our low. Here's our retest. If we do not have a retest, the trade is not optimal, and therefore it would fail in the ruling system. This rule is fairly simple to follow because the 1 and the 5-minute charts will be lined up almost exactly because support and resistance are going to be pretty standard lines. They're going to be rather static, where moving averages are going to be dynamic. So we have our retest. We have our 200 SMA, or simple moving average, that we are above. So this meets 2 of our criteria. Your third criteria is the 9 EMA, exponential moving average. The reason you use an exponential moving average as your third criteria and your trigger is because EMAs are front-loaded, meaning that they put more weight on the beginning than on the end. First 3 bars are counted more in an EMA than they are on the back end. Therefore, you're going to get what I refer to as a faster signal, which is what you want if you're trying to scalp options or Forex or stock, whatever it is. This works for any of those. Once we have a close above the 9 EMA, we have our simple moving average, 200 above, and we have a retest, and we have a close above on the 9 EMA on the 5-minute. Once we have that, we zoom in on a 1-minute chart, and we make sure that we have at least 2 green above the 9 EMA. And the reason for this is relatively simple. We want to make sure that it just wasn't a blip that got us up there. And you can see right there, we're above the 9 EMA. But as I stated before, everything must be met. We must have a retest of a key level. In this case, this would have been a long only trade. And you can see the level right here is how we have that retest. Without that retest, we do not have perfect rule situations. Therefore, we do not have an executable trade. In this example, we do have that. We are above the 9, but the green 200, we are below. So in this example, we do not have an executable trade. The trade becomes executable once we are above the 200-day moving average. In this example, we would not be entering here, but we would be entering here, roughly about 25 cents more. For short trades, this just works in inverse order. In other words, you want to be below the 200 SMA on the 5-minute. So we can see how we rallied right to it, collapsed. So our first criteria is, yes, we are still under that in this example. Now we would check the other criteria. Is this a retest? Some could argue that that was an actual retest. So let's just say, yes, that was a retest of trying to break this flag, and we failed the retest to break this bear flag. Therefore, that is a retest. So we could say that there's an argument to be made there. If we pop in the 9, we are here. So we need to be under the 9 before we can even execute. And this leaves you to a gap fill. Now, what's nice about this trade is we still got the retest. So let's say that you were uncomfortable with this because you're not below the 9 yet, because all your criteria to execute have to be met. Criteria 1, 200 SMA, we are below it on the 5-minute chart. Criteria 2, we have a retest and fail. Criteria 3, we have now closed below the 5-minute 9 EMA. Now with those 3 criteria checked off, let's go take a look at the 1-minute chart. Now, looking at the 1 minute in the same time frame with the 200 SMA sitting right here, we can see very clearly that up here where we had the reversal, that really didn't give us the same signal because the 200 was not below yet. Therefore, we don't have a trade. We now have a possible trade because we are below the 200 SMA on the 1-minute chart. While all the criteria was met on the 5-minute chart, it must be met on both charts or you do not have a trade. You must follow all the rules. This system, it is to get you consistent, to get you to a place where you are consistently being profitable. It is very simple in hindsight to go back and look at this chart and say, oh, we should have shorted right here. That was so obvious. It's obvious until it's not. What you want is a set of criteria that you follow so that you can replicate this over and over again. Here's your breakdown bar right through your gap. Then we come down and then we retest that breakout bar. So now I'm in a position where I'm below the 200. I have a retest that has now failed. We know all the criteria from the 5-minute was already made up here. So the moment that we get those closes, at least one close and then a move lower, we could act. And that would give us an entry on Tesla right here. So far, we've identified how to find our targets and how to enter them. Now the question is, how do we exit? How do we come up with a consistent system that we can replicate over and over again? It's very simple. In this example, we entered right there. So we know where our entry is. We're going to just very simply denote that right here. Your exit strategy is going to be based upon the 9 EMA off a 1 minute and a 5 minute chart. So we know we're in right here. And what we're looking for is at least one 5 minute close below the 9 EMA. And the first one that we get is right here. Now you confirm this on the 1 minute and you can see 2 red bars under the 9 EMA. That would have been your stop. So in other words, you have 1 red bar on the 5 minute right here at 3:30. And then you zoom in and find it reflective from 325 to 326, which is in that bar. And there's 2 red closes under it. Therefore, that would be your stop. This would have netted roughly $5 in about 3.5 hours. This was actually a trade we did in the Alpha Chasers community on Friday. Now, this is a very simplistic exit strategy. In other videos, I'll get more in depth, but this is one that's very simple. 1 entry, 1 exit stops for the trade. In other words, let's say that we enter the trade and it's not going to work. Like everything else, not everything is 100%. The previous bar from the entry bar. In other words, this was our entry bar, so it is the low of the previous bar. That would be our stop. And that's how you would quantify your risk. So obviously you close here and that was our entry. This would be your stop. Your net risk on the trade would have been 35 cents. Let's call it 50 cents with slippage. So on this trade, we would have been at 10 to 1. Right, 10 to 1 risk versus return. The entire rule systems is below in email form, so you can have a written copy of it as well. I would suggest that you watch this a couple times. But to recap, we went through exactly how to find ideas in the morning, how to enter those ideas, a strict set of rules to enter those ideas, where to get stopped out, where to cut your losses, and how to exit. If this video was helpful, please comment below and let me know what other educational videos you would like to see. I'd like to start doing more of this content. If you found value in this, please pay it forward. Please share this video with others. Word of mouth is how we educate. I obviously can't reach everybody. And if you like it and found it helpful, give it a thumbs up. Have a great day, everyone.